Hello, everyone, and welcome. This session is part of a mentorship program that I'm doing. The program that I'm calling it's called the Wave to Success. It's a community of travel agents. We meet up over Zoom a few times a week, normally about twice a week, Mondays and Fridays. This in particular, this session is about financial session. There's nine of them, and there might be a few more in between. This one is open to the entire travel community, even if you have suppliers, people that you know, spouses, people that we are going to talk about being a business owner, collecting funds, a little bit of taxes, investments. There's a lot of stuff that we are going to include. Let me share the page that I created so you guys will if you haven't seen it before. Just one second. All right. And I think I need to refresh it. All right. So this is the page that I created. Sessions again, 4:30 Eastern. You'll have a link here for next week. I also created a form here if anyone wants to ask any questions or things like that that I will talk in the session. You can pick any of the sessions that we're doing and ask. You can even ask for previous sessions, and I will address them during the live sessions. Next session again will be about merchant accounts and how to get paid from clients. We're going to discuss a few issues. If you've missed the intro, there's a video here, and the next one, the one that we're having right now, will be loaded as well. I think I created a poll that I wanted people to know about your business structure. When you guys get a chance, please answer. You don't have to put your name or stuff like that. This is just for me. It will help me with the session itself. Um, so again, a little bit about myself. I've been working in the travel industry for the past 26 years. Run a host model agency under Travel Planners International, a little bit with another hosts as well, a little on my own. Um, I've done a lot of research about business structure, taxes, investment, things like that. I am not a financial advisor. I'm not an accountant. I'm not a lawyer, but I will share from my experience. This is educational purposes. This is not financial advice. This is not a legal advice. I would highly recommend that you consult with a tax professional, a lawyer, a certified financial planner for everything that you might want, but I can give you a little bit of what I have been doing and what worked for me, and hopefully it will work for you. So, the subject again that we're discussing today is the business structure of the travel agency, right? Of your company. We do have a few options for business, and that's what I was asking in the poll as well. I will ask, but you have the option to work as a sole proprietor, meaning you technically don't even have to open a business. You don't even have to to register your business. I don't recommend it, but it's possible. You can operate under your own social security number, work with a regular bank account that you have, a personal one, and just start your business. I'm seeing a few of you that are doing that. That would probably not be a recommended business model. Um, just because opening a company is a very, very easy and cheap process. So I highly recommend if you are with the agents that picked sole proprietor and working under your own social security number, I would recommend that you look into the next business structure, which is the LLC, a limited liability company, which means that you are now going to identify, you're going to pick an agency name or a company name, and the company can also operate as a different company. So you can be, I have multiple companies, but you don't necessarily have to operate on that. It can be um, Roy's Travel, but then later on you could do a DBA, a does business as, and work as a different entity if you wish. There's some things that you'll need to fill with your state about it, but it is possible. So what is the LLC? What is the limited liability company? Um, it's an option for you to separate and create a limited liability for legal purposes, separating between you and the company. You being the individual, the owner, the employee. Again, we're going to talk about the structure, but it's an option for you to separate. You will get an EIN, an employer identification number, which is, again, you don't have to run payroll to or pay yourself salary in that sense, but the company itself will have similar to a social security number. A social security number normally is a 323, and a company EIN is normally two, and then 67 again, depending on. I said 67 as my kids are listening. Um, so you do have that option to open an LLC. Again, the process itself is very, very easy and simple. There are a lot of resources, YouTube. There are also companies like LegalZoom that you could do it. You can probably speak with your accountant. It's probably going to be the more expensive option, but they will have the option for you to open a company. I've done the scenario with our mentorship group. Took me about, I want to say less than an hour, anywhere really close to 30 minutes to open a company, apply for an EIN, buy the domain, get an email, and get everything set up. Again, less than 60 minutes and roughly about $100. It just depends how costly the domain is and how much you're buying it for. So it's very, very easy, very simple. And then when you open the LLC, when you open your company, you now have three options to work in that company, in that LLC. LLC can operate as a sole proprietor, meaning as similar to what you would work on your own, and I'll explain for the tax purposes. And then you have an option for the LLC to file as an S corp. And then actually they can even file as a C corp, which is incorporated, which none of you are, and that's good because it's a very, very complicated type of business. I would not recommend being incorporated in that sense for a very small agency. So I see some of you, seven of you are, let me let a few more people in. Seven of you are right now in Schedule C, meaning you're kind of filing, you're an LLC, but you're filing as a sole proprietor. And then a few of you are, two of you are an LLC filing as an S Corp. When you are an LLC filing as a C Corp, as a Schedule C, okay, these are all for like tax purposes. So an LLC that does a Schedule C, that files as a sole proprietor, the business does their own calculation in terms of profit and loss, and then takes that amount and just transfer it into your individual taxes. So when it's time to do your taxes, you pretty much just file one taxes, one tax form. The business calculates everything, transfers a number, and then that number just gets added to your individual.
And then when it comes to our ports, we've got longer stays, nights, many ports. And
let me see if I'm muting someone. Okay, thank you. Please, if you're in an area where you're, it's not, it's loud, please mute yourself. You do have the option if you want to ask any questions, or you can unmute to ask questions if you have any as well. So again, the LLC filing as a Schedule C is a good entity, creates a liability difference. So you are separating yourself. Because you got that EIN, you can open a bank account that is separate from your personal. So if something happens and someone sues you, or you have some legal issues, or I don't know, God forbid, you have to go bankrupt for the business, then there is a separation between personal and business. Now, it doesn't mean that if you did something that is illegal and someone's going to sue you, they can come after you personally. But if you've done your business, if you worked your business correctly, and they just want to sue you, then your personal assets are separated from the business assets. So if someone is suing your business, they can't come and take your home, okay? Because it's a separated entity. That's why I highly, and a lot of people highly recommend that people open an LLC and then separate the finance. Some mistake that I see people that are doing is they have an LLC, they separate it technically, but they still operate from like one bank, or they use one credit card that is yes, I have my Amex that I like or my Chase that I like, and then I'll use it a little bit. I'll go to the supermarket here. I'll go to buy the domain. I'll pay the host fees. I'll pay insurance, and then lease of my car or whatever it is. You do want to separate and not mingle personal and business finance, bank accounts, credit cards. You can use a personal credit card, a card that is dedicated for personal use for your business, but don't use it for other things other than your business. And then when you are paying that card, make sure that you pay it from your business account. Okay, I'll repeat. There are a few business credit cards out there that you can open. There are better ones that maybe are designated as personal. You can use a personal card for your business as long as that card is only used for the business. Okay, and that card is also paid by the business. So when you get a bill, you want to connect your business account to pay for that card. Again, we want the separation between the business and your personal entity to avoid if something happens and someone kind of comes after you, or a lawsuit, or something happens with the business, a supplier, I don't know, defrauded you, something, not a fault of your own, nothing bad that you did, just unfortunately, let's say managed poorly or something, then you don't take those losses. You don't take the risk into your personal finance. Okay. Any questions about Schedule C, LLC in general? Again, I see most of you here on the group that are operating as an LLC Schedule C. So that's good. The next one up, and I'll call it the next level. Okay, the next level is a few of you here, three of you that are an LLC filing as an S corp. Okay, the S corp entity is a little more complicated. It's a business structure that is a little more complicated in the things that they have. It has to have employees. It has to have a payroll. There's it's a separate entity. It's similar to a company that is incorporated, but it's still a simple company. When you are filing taxes, you are filing corporate taxes, and then you are filing individual taxes for your home separately. The business is filing their own taxes. There is a distribution of profit that you then take and move it into your personal as profit from a business. But it's a much more complicated business. The agents here that are operating as a Schedule C, because I did ask a second one if you getting a 1099 and a W-2, and I'll discuss the differences. But I see most of you are, which is a little bit weird, because we have three that are LLC S Corp, and oh, okay, so some are doing both. Because when you are an S corp, you have to do a W-2. You can't do only 1099. You have to do um, that's okay. If some of you made the mistake with the form, it's fine. But okay, because it just didn't make a lot of sense. Again, with an LLC Schedule C, you are operating with a 1099. Most likely, you will get a 1099 from your host, from your main advisor, from the suppliers. You just gather the 1099s, you sum them all together, you put them in your personal tax return, you deduct cost of business, your host fees, your insurance, the office, and all of that. And then again, the amount just adds up, and then you get one number. You file taxes separately. When you are an S corp, the company again a little more complicated has to have payroll. You have to pay yourself in a W-2. You literally have to run and say for the month of April, Roy worked X amount. I mean, you don't have to set X amount of hours, but this is the amount that I want to pay. Yes, you can automate it. There are options. You can either work with, there's simple companies like Roll with ADP, or there's a lot of them that are low cost. And of course, there's full-fledged ADP, bigger companies, or maybe even your CPA can run your payroll too. It just depends. When you are running an S Corp company, this is a more expensive way to run your business, but it has a lot of tax advantages and a better separation when you are doing an S Corp. Most recommendations that I've heard, and I'll talk quickly from a personal experience too, when you make more than 60, $70,000 after expenses, when this is your profit, 50, $60,000 in net profit, that's the time to start looking at to switching to an S corp. And again, the advantage of having an LLC, the LLC can decide almost every year that now I want to file as a sole proprietor, or now I want to file as an S corp. I would only recommend, because I've done the mistake myself, to only do the election of how to submit your taxes at the beginning of the year or before the first quarter. Because again, an S corp company runs payroll. So when I send myself salary, I deduct and withhold taxes. I withhold Social Security. I pay unemployment fund. I pay into all of those. So I have a little more fees. Again, I'm paying as the employer. I'm paying as the employee. I don't need to make estimated taxes like an LLC Schedule C does, right? Hopefully, I'm assuming a few of you are making good money, and then every quarter you pay your estimated taxes at the end of the year or towards April. You look into the numbers and then you see if you need to pay a little bit more, or if you have a refund. Normally, what I used to do is just take that refund and move it to the next quarterly estimates, so I don't need to make my next year's payments if I had it. Again, with an S Corp, business structure is a little bit different because you are running payroll. So why would you even do that? Because it sounds too complicated. And we also have payroll fees and payroll taxes, and we have more things that are that we have to do as an S corp. The main key is again, and if you are at that point where you are making 60, 70, 100, $150,000, you will see that when you are paying your taxes, because you are getting that money gross into your account, right? The host is paying you gross. You have to put money aside for taxes. You do have self-employment taxes. You do have Social Security that you need to pay. There are a lot of things that you need to pay when you are filing as a Schedule C, again, assuming you are making good money. what we are trying to save when we are moving into an S corp model is I am now the owner employee. I am paying myself. Let's say my company makes a $100,000 profit a year, profit that I take. As a Schedule C, I take the entire income. I pay all of the income tax, state tax, payroll tax, Social Security on the entire $100,000 profit. Now, if I am now moving into an S corp, I am now the owner employee. I pay myself $50,000 salary, let's just say. The amount needs to be um, adequate to the amount of time you work in the business or something that is equivalent to what a travel agent would make. So it needs to be a realistic amount. I can't pay myself $1,000 a month. I can't, and I don't need to pay myself $10,000 a month. Okay. So let's say, for example, 50,000 from my example, then on the 50, I would pay the employee side, employer side, Social Security. I will pay a little bit more because now I have unemployment and things like that. But the other 50, the company just releases it as profit. And that profit, that $50,000 extra that the company has filed taxes on, and now moves it directly to me, and I do what is called an owner's draw. I just move the funds to my account. This does not constitute as income as income for for Social Security, and for you pay different type of income tax and different type of Social Security. There are no payroll taxes on it. There's no self-employment taxes. So for the most part, you will probably save between 15 to 20% on the additional amounts. And again, depending on how your business is and how much you're profitable, that can be tens of thousands of dollars. Now, an LLC S Corp is a complicated business. Your tax preparer, and I think most of you are working, at least 10 of 10, 10 that answered are working with a tax professional. They will for sure charge you more because now they're doing two taxes. So it's a more expensive business to maintain. When you're paying payroll, payroll is normally about $40, $50 a month, or again, depending on the payroll that you run. So that's another $400, $500 a year. And then in some states, the corporate filing are higher than a regular LLC Schedule C. So you will have an additional amount. So only when you reach a point where you're paying a little too much taxes when you are a Schedule C, then you want to look into it. Something that I would recommend if you are working with a tax professional is to reach out to them and say, hey, based on last year, based on 2025 numbers that we already filed, we're all good. If we change the business model and now I will be an S corp, what would my tax liability would be? And then you can start planning because you pretty much missed the boat a little bit for this year. I wouldn't recommend doing the switch, although you can do the election still and even ask the IRS to look at your company starting January 1st. I don't recommend it. I have done it myself. I do not recommend it because I've missed the first quarterly, which means I now had to open accounts with the state and with the labor department to individually pay for first quarter all of the things that I've missed that normally go through payroll. So I don't recommend it, but you now have a lot of time. You have at least 6, 7 months to start getting ready and take a look into next year. And again, sit with a tax professional, whether you're going to pay them $100 or whatever they're going to charge, or maybe they're not going to charge because you're an existing client. And remember, it is the advantage for the tax preparer they would want you to move to an S corp because the fees are going to be higher, right? So they do have some sort of an incentive for you to switch. So I do recommend that you reach out to a tax preparer, CPA, accountant, and have them run the numbers. See how much money you can save. I can tell you personally, I saved close to 20 on the first year, close to $20,000, and I saved more in the following year because there are more ways within schedule with an S corp to actually save money. And we will touch up on it when we talk about retirement planning for business owners. But just as a quick segue to it, when you are an S corp and you are an employee, you can open a 401k for your employees, meaning that's you, and then you can do an employer match. So you can almost put double the amount in the 401k, whatever the business gives you, which is you, right? It's the same person, it's just a different hat. But when I put the hat of the employer and I'm giving it to the employee, which is me again, I can deduct the expense as payroll because this is a benefit that I'm giving my employee, and then I'm automatically taking the full benefit because I am now getting a match from my employer. There are also more
Oh,
options.
to be here with me with this thing. Oh, excuse me.
Please mute if you're yeah. There are also options. My kids are a little bit older now. They're 15 and 17. They help me around with the business. I put them on payroll too. They escort cruises with me. They help me with some marketing, with some accounting, and some back office stuff so I can do payroll. When I do payroll for them, meaning they have salary, I can have a Roth IRA for them. Again, we are going to talk about retirement a little in a future sessions, but it all leads to all the sessions. I've planned them specifically to lead to a point where we are not just operating our business, just yes, we are selling travel, but the ultimate goal for most of us, right, is making money, and it's the FI, right, the financial independence. The business actually makes money. We take the money and then we use the money in order to gain financial independence by saving, investing, uh, using the tax codes and the benefits of being a self-employed or an employee with an S corp to gain the benefits, right? To write off the correct deductions and everything so you can make more money or save more money into your account and pay less taxes. Um, Again, I see most of you are 1099. I see a lot of you have been, uh, some of you have been doing this for over 10 years, over 15 years. So that's great. Um, does anyone have any questions about the multiple business structures? I am not going to touch about incorporate because again, not relevant. None of you are there. I wouldn't recommend even getting there. Um, any questions about the business structure? You can unmute if you want. You can post in the if anyone has like a comment. Did I was I speaking Chinese? Anything? Any questions? Something that's is that understood? Did you guys have questions about the specific thing that maybe I helped you solve? Okay. Again, when you are getting 1099s from your hosts, from suppliers, you are getting gross. You are paying yourself, right? Or you're filing taxes. You have to set the tax accounts and everything set up for quarterly taxes and everything that you need to do. And then when you are doing an S corp, again, a more complicated type of business with that has to run payroll. Lots of advantages to an S corp. When the business has enough income, it definitely justifies itself and makes sense to do. Okay. And again, my recommendation, reach out to an accountant, have them run a scenario. Okay. Um, Someone asked, can they remain an LLC, Schedule C, if you have one agent on board? Yes, definitely. You can, so you're getting a 1099 from your host, and then you are providing your associates with 1099s. More of, you can be an S corp, meaning I am the owner employee and my associates get 1099. So they're not employees. Even though the company works and has a payroll, they are not on my payroll. They are not my employees. They're ICs. So it's very it's very diverse. You can do whatever, like however you run your business. It's just what makes more sense tax wise. The goal for changing the business structure is to, I don't want to say take advantage, right? But we've been hearing a lot about the super wealthy people that don't pay a lot of taxes. This is how you avoid legally paying a lot of taxes. I've done a session in part of our mentorship program where I called it "How to Avoid Paying Taxes Legally." But there is quite there are a lot of options there, and we will touch up on them in the series. Um, but yeah, if anyone again has any questions about the subject, any even regarding future sessions that I've mentioned, no, guys are quiet. But okay. So again, I posted the website. Let me share the screen again for some of you that haven't seen it before. I created the page. You do have the opportunity to register to the next one. I will update this so you will have the next session that is coming next Tuesday. Session is going to be called Merchant Accounts and How to Get Paid, meaning how to get paid from your suppliers or how to get paid from your clients. And if you have any questions about that specific session or any future sessions, please feel free and add the question. And then the recording will be here. This is also going to be on YouTube. So, like everyone on YouTube, if you want to subscribe, if you want to like it, you will get a notification once a new one is loaded. And I will try and load this one as soon as this is done. That's it. That's pretty much it for the session. Thank you everyone for joining. Again, next session Tuesday, 4:30 p.m. Eastern time. I hope to see you there and maybe more people. And that's it.